Thanks for joining us on Bloomberg Quint. A quick update on an index stock and therefore this necessity to do it right now with me, Ira Duggal as well. And the stock of Yes Bank has fallen about 60 odd points at 1517 because in the disclosures that they have to make as per norms, there is a difference in the gross NPAs as reported by the bank and as reported by RBI. And the difference is quite staggering. Now, Ira, come in on this. I mean, this is probably the first of the things that we are seeing, but the difference is the one that caught my eye and has probably caught the market's eye as well, and which is why this stock is actually in a bit of a free fall.
Absolutely. Let's just run through the numbers. So what the bank has disclosed in its annual report is that according to them, that is the bank's internal assessment, the gross NPA as on the 31st of March 2016, remember this is last year's number, was 748.9 crore. The RBI's assessment of gross NPAs was 4,925.6 crore. Near that's a sevenfold difference between what they thought the NPA number was and what the RBI thought.
Now, let's pause here because this is important. Yes Bank all through the results has been saying that there is no problem with the asset quality, even though certain quarters of the analyst community always thought that, hey, is there something now? Is this normal or is this due to the the provisions that we're talking about? Why is it that there could be such a large discrepancy?
There are two parts to this. One, that remember this period of between March 15 and April 15 and March 16 is the period in which all banks have taken a hit because of the asset quality review. The asset quality review was done precisely because of this reason, that the RBI thought that there was underreporting of bad loans. So I would not be firstly surprised if all banks put this disclosure in their annual reports now that the RBI has mandated that they have to disclose any divergence.
So there will be a difference for
a lot of banks, according to me. According to me, a lot of banks will have that difference. The second part to this is that some of this difference has gotten normalized over the current financial year ending March 17. And in fact, Yes Bank says that in their disclosures at the end of that, they asterisk it and they say that some of this has gotten normalized over the current or actually the financial year that just ended on March 17. But there was still, even at the end of March 17, if you recall in their quarterly results, there was still a divergence between what they thought NPA was and what RBI thought. That was about a 900 crore difference on account of that one cement account, which is widely believed to be the JP account.
Okay, and I think what Ida is pointing out is very pertinent. Probably the market also realizes that this may not be a Yes Bank specific phenomenon, because otherwise a number as divergent as this would not lead to a 3.5% fall in a stock which is widely traded, fairly liquid. I mean, I would presume that if this was taken in full seriousness and if this came out of the blue, then there could be an 8, 9, 10% fall on the stock, because remember, these banks are trading at life highs, so to say. So it's not that they are trading at cheap valuations, they're expensive valuations for most banks, and yet the stock is about 3, 4, 5 odd % down, not really too dramatically lower. But just a bit of an eyebrow raiser. Absolutely. Simply because of the fact, what I'm gathering from my sources, Ira, is that when this news came out, there are analysts who've called the bank for responses. They've not been particularly satisfied. This is the rumor on the street, of course, that people have called the bank and asked them for a response because there's a disclosure by the bank. They haven't been particularly happy or completely satisfied with what the bank has responded.
Okay, I'm sure, and I think also the extent of divergence is important to keep in mind. Because sevenfold is a little large. I mean, I can understand that all banks will have some divergence at the system level between the September 15 quarter and the December 16 quarter, for which we have full results. The jump in NPAs was a doubling of gross NPAs, reported NPAs. The worst of the lot was Axis Bank, which saw about a 300% increase. So this is even larger than that. So the divergence is not surprising, but the extent of the divergence is.
Yeah, so maybe some clarification by Yes Bank could be warranted as well. But keep in mind, as Ira said, it need not necessarily be just a Yes Bank specific phenomenon. It could be something that even the other banks may report as well. Thanks for watching Bloomberg Quint.